Live from Tokyo, this is Insight with me, Sherian, where we dive deeper into the stories that matter with crucial context and analysis. Here's how Asia is positioned right now as we await the latest decision from the Bank of Japan. But before that, investors still dancing to President Trump's tune. Take a look right now because we are seeing those China-exposed assets rally. We're talking about the Chinese yuan turning positive, the Aussie Kiwi also gaining ground, with President Trump really saying that he would rather not have to use tariffs on China. And of course, Nikkei stocks also gaining ground for a fifth consecutive session, the longest winning streak since August. And we have the Japanese yen treading water at the moment ahead of that BOJ policy decision. But let's take a look at exactly what the president told Fox News when it comes to those tariffs on China.
We have one very big power over China, and that's tariffs. And they don't want them, and I'd rather not have to use it. But it's a tremendous power over China.
And earlier in a message to leaders at Davos, President Trump also demanding lower interest rates and lower oil prices.
I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately.
Oil prices fell on the back of that comment, setting them up for the first weekly decline this year after weeks of gains due to supply concerns. Higher fuel prices impacting inflation here in Japan, with rising energy costs helping send a key inflation gauge to 3%. The Bank of Japan looks set to proceed with a 25 basis point rate increase when we get its decision now, any moment now. That could be the largest increase in 18 years. Let's get perspective from Rie Nishihara, Chief Japan Equity Strategist at JPMorgan Securities, also Naomi Fink, Chief Global Strategist at Nikko Asset Management. Great to have you both here in the studio with us on this crucial Happy BOJ Day. Every time we saw the BOJ kind of a little bit later than usual, they came out with a rate hike. Naomi, is this something that we should just be expecting at this point?
Well, the BOJ has not pre-committed to any specific time to release. And if we are going to see a rate hike like the market expects, then that requires some preparation of the statement, et cetera, and communication. So I don't think we should read in anything unusual to the fact that we haven't had a decision yet.
Is there any risk that we're so priced in at this point?
Well, I mean, it does appear that the move is priced in. So, yes, I think that's the reality. If the Bank of Japan does not deliver the rate hike, that would be a surprise to the market.
Ria, what sort of rate decision are you expecting? A hike, but the outlook, I guess, is important.
Yes, because hike itself has been mostly fully priced in as of yesterday. So I think the market focus is how the Governor Ueda will communicate, for future, and also the FX market's reaction. And those two are the really crucial point.
And the point is that he doesn't really want to send the yen rallying right now, as it happened back in July, right?
Yes. But 155.9 is for us, from a market perspective, the green zone for Japan, politicians, as well as the Japan economy, consumers. Corporate is 145 to 155. So I think at this point, there was some yen appreciation so far, but this level is not really hurting Japan economy.
Naomi, do you expect more appreciation if the yen starts to behave like a safe haven? I know that we're bracing for potential tariffs globally at this point.
Okay, first of all, I think that our outlook is relatively benign for growth, and I think the yen starts to act as a safe haven when there's risk aversion, and we don't see that yet. Will there be interim volatility sometime within the next few months? Most likely, yes, but will it stick? That's not our central scenario. Regarding the tariffs, I think that's a risk worldwide, but one thing that I would like to really consider looking at Japan, and I know that Japan's been in and out of trade surplus and trade deficit, that the U.S. probably can't ignore if it's acting in a strategic manner, and what we see, I think, is a strategic manner, is that Japan is probably customer number one for AI. We already have a digital deficit here. We have aging demographics and a labor supply shortage. And even though real wages are rising, there's still a lot of investment, including investment in software. And AI is a big part of that. People don't fear AI like the robots will have our jobs because of the structural balance. So I think the U.S. has to consider very carefully who its main customer for this big technology that they've invested a lot in and yet haven't yet realized the total factor productivity off of the back of.
That trade surplus that you talk about, especially against the U.S., as compared to the first Trump administration, I think we have that chart showing that it's really the fifth highest on record right now, of course, also a consequence of the weaker Japanese yen. Rie, when it comes to these trade risks, how do markets price that in, especially when it comes to different sectors behaving in different ways? Perhaps exporters also could take a hit.
Yes, there is a largest exposure of export to North America. Auto sector is has the largest exposure, like 34%. So, and only partially the market has priced in. And when we look at that potential OP influenced by 10% universal tariff, OP impact would be -20 to -100%, depending on individual companies. But EPS downward revision so far since November 5th is only 10%. So there could be additional downside impact, especially on that sector. And also, pharma sectors, regulatory concern is, outweighed on the share prices right now.
When Naomi mentioned earlier when it comes also to investments, I think, Rie, you also made that point in your latest report about Japanese investments into the U.S. economy, right? I recently spoke to the president of Tokyo Gas, who was telling me about more potential investments to come. Take a listen first.
Yes, we have to remember that Japan is
let's take a listen.
Yes.
Among our overseas businesses, North America is an especially important growth market for us. We think the key is to make investments across the entire value chain, not just in upstream assets, but also mid and downstream.
Basically, how are these Japanese investments being factored in when the BOJ moves as well?
This investment is, I think, separate, I would say. But we have to remember that Japan is a top country, first year in a row in terms of the FDI into U.S. So think about that potential negative impact from tariff. Japan will be the lightest country compared to the rest of the world. That is one thing. And another thing which potentially supported the BOJ leaders' message change in the past 10 days would be probably, I think it would be related with premier meetings, which is now arranging in first half of February between President Trump and Prime Minister Ishiba. So for Japanese government, for Japanese corporate, they were all on the same page to rebuild the good relationship again between Trump administration and Japanese government. So they are thinking of reviewing any chance to make additional investment in the U.S., which would lead to benefit of corporate tax cut, which is what President Trump said in Davos, right?
Talking about politics and Prime Minister Ishiba, how is the political landscape right now set up for this rate hike coming from the BOJ?
Yes, so I think priority from all policymakers would be to make sure of the good relationship between U.S.-Japan right now. So a rate hike would support some, slowing down of the appreciation of USD and yen depreciation, which is a win-win to both U.S. and Japan. So why now? While that economic data does not show a clear pick-up in the past 1 month since this December meeting, I think that sort of political situation may be related to this, abrupt shift of the BOJ's leader's message.
What do you think, Naomi?
Well, I think that Insofar as there are political influences on policy, maybe there are small influences on timing, but I think the trajectory remains very clear. The inflation has been at the BOJ's target range for a couple of years now. So we could have had a hike in December, but we didn't. The BOJ probably is justified in gradually withdrawing stimulus, but withdrawing stimulus is the key thing here. And if it didn't do it in December, then I think January. And I think that's the key takeaway here. I think the negotiation is very much limited to small shifts in timing when it comes to politics.
We're going to actually get another guest later in the show, the former BOJ Deputy Governor Wakatabe-san. And of course, Rie, we've been on a panel together, and you know where he stands. He doesn't like these hikes. He thinks that it's too premature. What would you say to that?
Yes, but current BOJ logic is, their degree of easing is very big. Like, real-term policy rate is minus 2% or more. So 25 basis point rate hike is just an adjustment, small adjustment of this big accommodation. So that is Bank of Japan's current logics. And of course that there is gradual recovery ongoing. But I think this is understandable because Bank of Japan can be behind a curve. Looking from a global picture, this is now, Bank of Japan can hike rate. And Bank of Japan's leaders have sent to the market that every semi-annual, probably one rate hike. And so last time it was July. So this June is, it's not from off those baseline.
How high do you think we're going to go in this cycle?
How?
How high do you think the interest rate will go in this cycle of tightening?
Yes, so 25 basis points hike every 6 months.
Every 6 months. So
yes.
We could get to perhaps 1% by the end of the year?
Yeah, so June, July, probably, and December, January would be the second one. If current domestic economic condition, recovery continue.
What do you think?
Yeah, so I think the BOJ is in a situation where it has to consider two-sided risks. So on one hand, we do have inflation, and some of the inflation, especially food inflation, is biting households right now. So that also damages the prospects for real wages, given that also considers inflation. And we want that virtuous cycle of wages and prices. So we need to keep inflation controlled. Equally, though, we have the demand side of things, and as Nishihara-san said, we still are net very accommodative. If we look at one indicator, real rates minus real growth, we're in negative territory still, despite the rate hike so far. And even if we get another one, we'll still be in negative territory. So that's still net accommodative. What the BOJ, I think, doesn't want to do is shock the economy, because you don't really want, especially smaller businesses, households, suddenly feeling that like they have a big squeeze. If they do embrace the policy of gradualism, then that gives some time for that virtuous circle to continue smoothly adjusting. Prices rise and wages, then wages rise and prices rise. And it doesn't really provide such a squeeze, especially on the smaller businesses that employ the greater part of Japanese employees. So the speed really does matter now, but the direction still is up.
When it comes to those smaller companies, unlisted companies, how detrimental could this rate hike be, despite the fact that the BOJ might be aiming for gradual change?
So this rate hike, I think it could potentially be the straw that broke the camel's back for some firms. But I would argue that that is healthy. During the lost decades, we had these firms that were not profitable but were supported just so jobs would be protected. We're in a totally different situation now where we have a labor supply shortage. So it's natural for firms that are long-term not profitable to exit the market. That's part of, I think, what Deputy Governor Uchida calls the economic metabolism of Japan. So if we keep it to the firms that are naturally going to exit the market because they can't afford to pay higher wages, because the interest rates are too high for them to be profitable at all, then I think that is probably healthy. If we squeeze whole sectors at a time, that's not healthy, but I don't think that's what's going on here.
Will the tightening be enough to support the Japanese yen? Because we're talking about inflationary pressures finally coming to Japan, but at the same time, when you look at, say, subsets like service inflation, 1.6% is still pretty low compared to, say, the United States, where it's like 4% plus, which is why some people are saying this is perhaps still not the time to continue tightening. So if we continue to see that differential and a very strong U.S. economy, U.S. exceptionalism playing out in 2025 as well, will that mean for the Japanese yen?
Well, I mean, I think that for the yen and the dollar, of course, relative interest rate differentials matter. The only thing is that by long-term measures, purchasing power parity, the yen is grossly undervalued. And even by shorter-term measures, so looking at relative real interest rates, the yen is still undervalued. So I think there is some room for the Bank of Japan to adjust, and even if the Fed doesn't cut as much as originally expected, I mean the cut expectations have already been scaled down. I think there's probably a bias for the yen to at least gradually correct a little bit higher, and as Nishihara-san pointed out, that can be tolerated by corporates. It's not going to kill anything if we see some gradual slight appreciation.
Maria?
Yeah, and also the rate hike is actually positive for corporates in terms of the animal spirit, or they could invest more rather than in 2 years' time. So I think one of the key conviction call from us is a rate hike is actually positive for Japan economy and corporate earnings as well. Usually, it is negative for corporate earnings.
What about the fact that investments are also happening perhaps overseas by Japanese investors? I know that policymakers have wanted Japanese retail investors to be more active in the stock markets, but a lot of that money seems to be flowing outside of Japan. Does that pressure the yen more, and is this consequential?
Individual investors. Yes, but NISA account. But 40% of NISA inflow is falling on Japan equity markets. So actually, net positive, even if we look back 2024 flow.
So when it comes to 2025 for both of you, what will be the biggest challenge for the Bank of Japan? And we've talked about many of them, including, of course, potential tariffs, the yen, politics here in Japan as well. Rie, I'll start with you.
Yes, I think Bank of Japan's hurdle or challenge is to find out the right time, because now FX is endogenous of their decision making. So not only the domestic economic data, but also to pick up a best time to in terms of the currency, in terms of the politics between Japan and the world.
Naomi.
Well, as the BOJ removes stimulus, then that means it's getting closer to neutral, wherever that may be. So at some point, that also means that the Bank of Japan has to do things like declare victory over deflation and actually say, yes, we've arrived, we're pausing. So that's not what's going on yet, but that is going to be a challenge that as we see rate hikes, the Bank of Japan is getting closer and closer to. So I foresee that as a potential point of contention within 2025.
Ladies, it's 12:17 local time here in Japan. We still do not have the Bank of Japan policy decision. We're looking forward to it anytime now. But thank you both for joining us today and previewing what the BOJ will do next and what could happen in the Japanese economy for the rest of 2025. That was Rie Nishihara of JPMorgan Securities and Naomi Fink of Nikko Asset Management. Thank you. And of course, you can also turn to your Bloomberg for more on our BOJ coverage. Go to TLIV Go to get commentary and analysis from Bloomberg's expert editors. Still ahead this hour, more analysis on the BOJ. Former Bank of Japan Deputy Governor Masazumi Wakatabe joins us. This is Bloomberg. Welcome back. Infosys CEO Salil Parekh says he's optimistic about the U.S. economy under the new Trump administration. He spoke to us at Davos about how he sees potential policy shifts impacting his business.
What we see is many of the policies being put in place, the discussions this week with U.S. executives is all about business becoming more robust in the U.S. So if that happens, when that happens, as business becomes more robust with the new approach, we will start to see more economic growth. And typically what we see in those cycles is much more focus on using technology for large programs. So we think it's a positive sign to have that sort of an approach going in. Already we announced our results last week. Last quarter, we had 6% growth. We increased our guidance. Our operating margin was above where the guidance was, above the midpoint of the guidance. So we feel quite good about what this year looks like. And if all of this starts to happen in the U.S., then that looks positive for the future.
Just how good do you feel? Because it was a lackluster year for IT services last year. How is it looking? What are you hearing in particular from your clients in the U.S.?
So the U.S. clients here have been quite optimistic, and their view is with more focus on the economy and with all of those policies coming in place, they are looking forward to more GDP growth in the next coming quarters. And with that, there are new technologies. Of course, there's focus on AI, but there's new technologies in cloud and data and analytics, in digital services.
So spending more.
And spending more in those areas.
Can you actually quantify the kind of spending that you're expected to see in the coming 12, 24 months?
So there, I don't have a number, but what it felt like this week in all the...
Right, we have breaking news out of the Bank of Japan. We are now seeing the Bank of Japan raising the overnight call rate to 0.5% as expected. This, as many economists had forecast, they're now seeing the vote coming with one dissent, 8-1, to raise the rates. The core CPI for fiscal year 2025 at 2.4% versus 1.9% as previously forecast. And all of this really as we're expecting the inflation outlook to be raised. The BOJ now saying that Japan's real rate is at a significantly low level. Remember, we continue to see this inflation pressure upwards, and the BOJ saying that the risks to prices are skewed to the upside for fiscal year 2024 and 2025. Again, the Bank of Japan hiking rates to 0.5% as expected. All 6 BOJ price forecasts show that inflation is at 2% or more. Let's actually digest the latest breaking news out of the central bank with former Bank of Japan Deputy Governor Masazumi Wakatabe, who's now professor of economics at Waseda University. Thank you so much for joining us today. And the decision, very much as expected, came a little bit later than usual, which is why we're also suspecting that this would happen. I guess the question is, what happens next?
Well, what happens next is the big question. I think that the BOJ is now confident about the projections, so that I think that first of all, they are actually going to hike more, I think, down the road. It depends on the, of course, situation, but we should expect a couple more hikes within a year even. Okay. So about the market reactions, it's for short term, I think it's not quite clear. Because if the uncertainty is lifted up, then the stock market would react positively. So maybe the Monday reaction will be a positive one. But who knows? I mean, that's the July hike was caused the market turmoil. So I think that's that we still have some sort of uncertainty going on. Yeah.
Right now, the Bank of Japan saying that if the outlook is realized, they will keep raising rates and adjust easing, but that the price risks are on the upside for this 2024 fiscal year, and that the price trend is in line with the goal in the second half of the period. The global financial markets overall are calm. Of course, we're watching what would happen with the surprises coming from the Trump 2.0 administration. Right now, the yen weakening slightly, but it's not a huge reaction. We're down 0.1%. It's treading water at the moment. We are now hearing that the board member Nakamura has voted against the rate hike. And this is perhaps not surprising given that Toyoaki Nakamura was one of the dovish policy board members. He had said that he's in general not opposed to a rate hike, but we see here that he actually voted against the rate hike. So Masazumi, what do you make of this decision and the fact that we got one dissenter, although as much expected as it was? Does it give you some indication of more deliberations at the BOJ next? I mean, they couldn't make it unanimous.
Well, I think that they don't stick to the unanimous decision anymore. I think that they're comfortable with this 8-1 and even a 7-2 the decision. So that's not the concern for them. I think that their concern is that the sort of market reactions, and also they're going to have to be concerned about the real economic developments. So my guess, in my opinion, that the BOJ is too kind of bullish about the price dynamics. So that's I would say, that they shouldn't have raised interest rate right now, because the real growth rate for 2024 is about negative 0.2%, as the IMF predicted. And the so-called underlying inflation rate is peaking at the October 2023. So we see some pickups in the headline and also the so-called core CPI measures, but they reflect the rise in fresh food and energy prices. So in that sense, that's still, I think that this is a historic moment. Remember that the BOJ raised the policy rate and remained that policy rate as a 50 basis point from 2007 to 2008. After that, the BOJ lowered the policy rate. And so about how many years? That's 30.
Yeah, so we are now seeing like the highest levels since 2008.
Right. And I think that the BOJ is hoping this is the beginning of the new era of the so-called normalization.
I know that you've been for a long time against these rate hikes, but the BOJ right now saying that, okay, accommodative financial continues will continue to support the outlook, that the economy is developing in line with the outlook, that inflation also, we got the numbers earlier today, and we topped 3%.
Right.
Not to mention that service inflation also seems to be picking up slightly.
Slightly, yes.
So is that slightly what is bothering you right now?
1.7. I mean, that's not as 2%. So remember, I think that if the current the monetary policy is accommodating, then we should expect some sort of increase in real investment, for example. But real investment, according to the GDP figure, has been stagnating rather than picking up. So the BOJ now, emphasizes sort of upside risk to their projections, but I doubt it. I mean, that's the question. I mean, that's if the rate is accommodating, you're going to have to see a robust sort of increase in GDP figures, but that is not happening right now. So I just wonder that the logic of the BOJ still holds.
When you're saying that the BOJ is really focusing on energy prices and other inflationary pressures coming.
No. I mean, still, I think that they are emphasizing on the sort of underlying inflation.
Underlying inflation.
Yeah, because the energy prices may go up and down. So that's fluctuating a long time. So for a while. So they're going to have to think about the service prices. So that's why that's 1.7. Is still important.
So the fact that we are getting these lines from President Trump about wanting lower oil prices, wanting lower interest rates from the Federal Reserve as well, how is that going to factor into the BOJ's thinking?
Well, I think that they don't still haven't decided. First of all, we don't know the magnitude of, for example, the fall in the energy prices. And also, we don't know quite sure the degree to which the Americans, Mr. Trump, would raise the tariffs. Okay, so if they raise tariffs, that would be actually inflationary, and combined with the late cut by the Fed, I think that the Fed is not going to cave in this time. But I think that if that happens, as the increased tariffs and the increased lowered interest rate would mean the more inflationary the U.S. economy. So that's, it has a positive and negative effects to Japan. I mean, that's positively, I think, if the U.S. economy is booming, I think that would support the general outlook of the BOJ. But if the inflation is not going to go down, at one point of time, I think the Fed must consider the rate hikes rather than rate cuts. So that would, have an impact, will have an impact on FX.
The board member Nakamura now saying that they need to confirm the rise in firms' earning power. We're seeing the Japanese yen reversing from earlier losses right now and holding at that 155, 156 level.
Right.
But what is right now the downside risk for the Japanese yen, given what we've been talking about the United States, U.S. exceptionalism, perhaps the possibility that the Fed might not be able to ease as fast as they want? Right.
Well, if that's the case, I think that the FX is not going to change much. So if the FX is, let's say, stay at the level or 150s, then say per yen, then I think that the BOJ's sort of projection should not change at all. So so that's the case. But if the FX moves to appreciate to the, let's say, the 140s level, then the all talks about the corporate profitability would kind of evaporate. And remember that this 25-point rate hike is more than the previous rate hike. So eventually, I think this rate hike must sink into the economy. So by that means that corporate profitability might be reduced. Yeah.
Well, we are seeing those Shunta wage negotiations coming through. And it seems that 5% plus is still what they're seeking when it comes to those raises. Looking at the market reaction right now and the fact that we still have yet to hear from Governor Ueda himself in the afternoon, one of our colleagues, Girovidi, right now saying this is about the most predictable and, dare I say, boring rate hike decision possible, given, of course, the chaos that we saw last summer. Have they done their job right when it comes to the communications ahead of this rate hike, at least?
Well, I think that's the two parts. I think that's the BOJ, right or wrong, has communicated their policy message by the speeches, by Deputy Governor Himeno and also the Governor Ueda. So I thought it was quite enough to signal that the BOJ is going to hike interest rate. But then comes the question about the leaks to the media. So that's the kind of problematic part. I think that they don't need to do that. I mean, it's not clear whether the BOJ has leaked information to the media outlets. But clearly that has been a kind of pattern. So that before the decisions, the media already knew the results. So that's not good. I think that's the first part. The speeches, official speeches by Deputy Governor and the Governor are good, I think, indication. But they don't need to, to emphasize more by leaking information to the media, if they did, yes.
What will you be listening out for in the presser this afternoon?
Well, I think that the terminal rate is the main question. As after this decision, what is the next move for the BOJ? I think that the 25 basis hike to a 50 basis point hike is a rate is pretty much sort of factored into the market. Now the next question is that does Mr. Ueda feel comfortable in moving ahead with another or a couple more hikes down the road? So my guess is that the BOJ has the one number. I think that's the 100 basis point as a kind of the terminal rate. So if that is the case, you're going to have to need at least twice, two meetings, two hikes to reach the 100 basis point. So the question is the timing. So the last time was July. So this time was January. So many would now predict that maybe 6 months later, around the next July, the coming July, and perhaps the next January. So that's the kind of question. But I think that the Governor will not give any hint about the timing itself.
Right, especially given that you don't want to cause huge implications for the yen, right? But
Exactly, yeah.
when we're talking about this 6-month pace of rate hikes to come, how much are we contending with the fact that we do have the upper house elections in July as well?
Well, I think that if that's the case, remember that the January decision coincided with opening of the national diet as of now. So it was unprecedented, actually. So actually, during that period, the BOJ didn't move. But the BOJ moved, right? So that maybe the BOJ has been sending a signal that they are not caring about the political sort of situation anymore. So if that is the case, the July is still a possibility. But if they don't like the July, September would be the next candidate. So there is a kind of question, but I think that you cannot exclude a July hike at this moment.
Also, the fact that we have to see the interaction between Japan and the United States. I mean, we're talking about trade surplus that Japan has right now against the U.S. continue to rise because of the weak yen.
Right.
We know that President Trump does not like that.
No, not at all.
What will you be watching in terms of the relationship there to see how BOJ policy could unfold?
That's a bigger question, and I think that's where the government, the Japanese government, and the Prime Minister in particular, should be really working hard, okay, to make a kind of liaison and a relationship. Remember that Mr. Abe, the former Prime Minister.
I know, they had sort of a bromance with President Trump.
Yes. So that was necessary. And they played golf together.
Right.
And remember that...
Does Prime Minister Ishiba play golf?
I think he does, but I'm not quite sure that he does play golf with the Trump. But I think that he should offer that that's an occasion. And remember, Donald Trump, Mr. Trump loves to play golf rather than to have dinners. So he claims that playing one golf is worth 50 times dinner table.
Right. Which might mean less tariffs.
Less tariff, yeah. But I think that the Japanese government and the Japanese Prime Minister in particular should be working closely with Mr. Trump. I think that Mr. Abe was fantastically good at making sort of bromance and relationship.
Do you think there's a red line by the Japanese government right now when the yen is just too weak, so much so that it affects their political future with households becoming upset?
I think that was the case for July. Okay, so that was the time when the yen hit actually 160s. Okay.
Yeah.
So I think that if yen depreciates to that level again, I think there will be more pressure, political pressure, for the BOJ to act. Right now, it's not that that precarious. So. If that is the case, I think the BOJ feels more comfortable. But I think the FX is always the concern. Okay.
We're seeing the Nikkei continuing to gain ground, 0.6% against the 0.6% right now. Fifth session of gains for the Nikkei, longest winning streak since August of last year. Real estate, consumer staples gaining ground. What does that mean for the broader equity markets? We have seen a lot of investments coming from abroad, Japanese retail investors getting into stock market trading as well.
I think that the two factors matter for Japan's stock market prices. One is if FX. So if the Japanese yen weakens, that would be a boost to Japan's stock prices. And also the U.S. stock prices. Okay, so right now I think that the U.S. stock price is also booming in the rally. So that in that sense, I wouldn't expect a sort of a huge sort of drop in the Japan's Nikkei or the Topix stock prices. A lot depend on these two things. Okay, so suppose yen appreciates a lot, then I think that Japanese don't feel that comfortable. And also foreign investors. Foreign investors are investing right now in Japan, Japanese stock, Japanese real estate, precisely because the Japanese yen is weak. So they see, the offices around Tokyo cheap bargain, okay, still. So if that changes, the perception changes. So in that sense, these two factors, the U.S. stock prices and the JPX, the foreign exchange, FX for the Japanese yen, matter a lot. So we'll see. Yeah.
And also, there's the indirect impact. For example, listed public big companies could potentially do better than the unlisted medium-sized companies here in Japan, affecting the broader economy if you have higher rates.
Yeah, of course, yeah. But then again, that's the that's the things are interesting. I mean, that's if you raise interest rates, there are of course that's those who benefit from that rate hike and those who lose from that rate hike. So that's the larger corporations are not indebted heavily, so that they feel comfortable. But the smaller companies are not that comfortable about that. And also remember that the lots of households are now on loans, housing loans. So I think that this is a kind of beginning of the process through which the households will feel some pains from the increased interest burden. Okay. So that how does it translate into consumption, real consumption, is the question.
How are they doing now at rates at this level? And now I guess 0.5%.
Oh, rates at this level, I think we haven't seen lots of negative signs yet. So that's the remember that's the short-term and long-term prime rates, of course, related to the policy rate. They have moved a little bit, but not that much. Okay. But then again, that's if the BOJ raised the interest rate from 50 basis point to 75 basis point, these prime rates must of course rise. Then that would influence have an impact on the rates on the loans. So I think that they are going to feel some sort of thing, pains down the road. So that is still premature to say. That is going to kill the whole sort of reflation project. Yeah, but and I think I still don't believe that Japan is going back to deflation. But I think it's still possible that the BOJ may miss the 2% target.
Yeah, you've been cautious about these rate hikes. Masazumi Wakatabe, really good to have you
Thank
on
you very
BOJ
much.
Day, former Deputy Governor, Bank of Japan, and Professor of Economics at Waseda University. As we continue to watch the market reaction right now, the Nikkei is up, the TOPIX is up, the Japanese yen reversing some of those earlier losses from before this rate hike. Avril Hong is in Singapore. What are you focusing on right now?
Yeah, Sherry, I mean, coming into today, I think the market consensus was that we would get a dovish hike, and then we'd really have to watch for Ueda, whether he sounds hawkish enough, demonstrates they're serious about policy normalization to boost the yen further. But you look at the details from their statement, it actually doesn't sound like a dovish hike. When they upgrade, the forecast for the core CPI has been quite significant. They're also flagging these FX developments more likely to affect prices than in the past. So I think that initial reaction when the yen was fluctuating is, I guess, par for the course, but more interesting, the recent climb in the past couple of minutes on the yen. So maybe a bit of an expectation that this was not a dovish hike. Interesting as well how Trump really demonstrated his influence on the markets with that talk about China tariffs. That also left a bit of strength in the yen earlier in the session today. Now on stocks, this is the picture. We're back from the lunch break. We saw it steady initially, actually extending some of the gains from the morning session, about 6.7% on the gauges. We're pairing gains now. So again, maybe this is not that dovish hike that markets had been expecting. Worth highlighting what we're seeing in the property sector that has been outperforming. There have been talks of how, for the property developers after the hike, maybe there's a lull when it comes to interest rates. So this kind of clears an overhang, prompts investors to relook the sector, buy as a whole, and of bonds, we're seeing it not really moving that much. Flip the board, take a look at what we're seeing in Japanese banks as well. Of course, this is a sector that's really been in focus. We've seen already how it's hit these multi-year highs for the Japanese mega banks. Worth noting that even though it's one of the sectors underperforming today, that they are trading on par to book value. Sherry.
Avril Hong there with the latest on the market right now as we react to the Bank of Japan's policy decision. That much expected rate hike of 0.5% just came today. Zuhair Khan, Senior Portfolio Manager at UBP, joins me now with his views. What do you make of this rate hike from the BOJ and also how markets are taking it in?
Hi, good afternoon. I think this is quite a well-anticipated rate hike. So actually, if you look at the market, just before the hike was announced, for example, the yen was weakening a bit, people wondering whether they would or wouldn't hike, and as soon as they hiked, it strengthened a lot. So I think this really reflects the consensus that's out there, and I think the markets are handling it, quite in stride, because I think it was expected.
Yeah, especially given, of course, the hints that we got already from Governor Ueda and the communication from the Deputy Governor, Ryozo Himino, as well. But how high are the stakes for the Ueda presser this afternoon, then?
Well, this is really, I think, the more important issue, because we've seen in the past it's not the policy action, but really the commentary afterwards that drives the market, and how they sort of present their forward-looking guidance in terms of, are the comments dovish or are the comments more hawkish? And I think that's something we really do need to focus on, because they've sort of flip-flopped several times in terms of, after the actual policy change, how they then talk about it, right? We saw that last year when they did the interest rate increase in July, that Ueda gave a very hawkish comments, and then, after that, the other members from BOJ had to give a more, after the market sort of overreacted to it, gave a much more dovish commentary afterwards to calm the market down. So I think that's going to be really the most important part of the communication around this rate hike.
Yeah, I mean, given the statement right now with the Japanese yen strengthening against the dollar slightly at the moment, it's taken a little bit more as a hawkish hike at the moment. But what are the sectors in the equity markets that you'll be watching for any reaction, depending on whether the comments from Governor Ueda in just a few hours are either dovish or hawkish?
So I think one of the interesting things is, if we look at the bank sector, actually, banks sort of have come down a bit. I think partly that's because a lot of sort of interest rate increases have really been priced into the banks. And so on the banks and financial sector, we haven't seen that much of a move. Real estate has, I think, surprisingly reacted fairly positively to this, which would sort of indicate that maybe there's more of an expectation of dovish commentary, and that's sort of what we saw, and that may explain why the banks aren't up and they're actually down slightly. I mean, small move, but slightly down. So I think maybe
if we do get more,
more dovish in sort of their expectation on the commentary coming up.
If we do get more strength in the Japanese yen, how insulated will these Japanese stocks that have performed relatively well, given the optimism on fundamentals here in the country, how insulated are they from strength in the yen?
So I think actually, a weak yen has stopped being a positive for much of the Japanese stock market. Japanese exporters would be comfortably profitable at even a significantly stronger yen. The gains that most of them make are actually from translation, since they do a lot of their production outside of Japan. So it's not that they export, from Japan. It's just how do they, at what exchange rate do they translate their overseas profits? And so that's a much smaller impact. I think the bigger concern in the Japanese market has been the excessively weak yen hurting consumption. And so in a sense, I think they would prefer, the market as a whole would prefer a slightly stronger yen because consumption has been the main issue in Japan. It's not the exporters' earnings, it's domestic consumption.
does that mean that some of those sectors that are more exposed to domestic consumption are not going to be the top priority for you when it comes to investing in them?
No, well, okay, so for myself, I mean, I manage a market-neutral fund, so I try to balance out the macro risk. But I think domestic consumption is something that we hope will, pick up, especially with the breaking of the deflationary mindset. I think, again, another aspect that is positive for domestic consumption is Japanese savers. Japanese have massive amounts of savings, which really generate nothing, from the money in the bank. So as interest rates normalize, especially older Japanese households who tend to have half or more than half their savings just sitting in the bank, maybe start to earn a little bit more and start to become a bit more confident about consumption. So there may be positive implications from that. Imported energy prices have been hurting Japan. Imported food prices have been hurting Japanese consumption. So, slightly stronger yen and slightly higher interest rates may be positive for the household consumption side. Other than younger households who, still have mortgages to pay off, the mortgages may reprice up. But I think the repricing of mortgages is going to be much smaller than the increase in wages, given wage growth has been strong. So I think overall it's going to be positive.
What about the risk coming from potential tariffs from the U.S.?
Well, the hope is that Japan is going to do fairly well in how they try to stay on the right side of Trump. Abe was the Trump whisperer. He was great. Unfortunately, Japan doesn't have Abe anymore. But I think, you have other Japanese, such as Masayoshi Son, who's sort of announced big investments. I think that creates a good impression. Other Japanese companies, I think, are going to announce more investments into the U.S. to create a good impression and to try to not be on the wrong side of the tariffs. I mean, there'll probably be some impact, but I think the Japanese are going to really try to minimize any negative impacts for Japan from that. I think that's going to be a priority for the government to stay on the good side.
When it comes to investing in Japan, is there any way to hedge potential tariff risk? Although, as you say, they might not necessarily be directly targeted at Japan, just potentially exposure to global tariffs.
I think that is absolutely the bigger issue, which is sort of the impact on overall supply chains, on overall global demand, and let's say animal spirits. That impact, I think, is going to be the bigger, sort of broader risk for the Japanese market.
Zuhair Khan, really good to have you with us, Senior Portfolio Manager at UBP, really taking us through potentially the market impact, especially in the equities markets here in Japan as we continue to react to that Bank of Japan policy decision. That rate hike to 0.5% was very much expected, priced in, but we do have Governor Kazuo Ueda's press conference later today. What that will really do to the markets, especially on that outlook of the pace of rate hikes to come, is what investors will be watching right now. Before we go, here's a look at what's coming up next week. State Bank of Pakistan Governor Jamil Ahmad joins us Tuesday for an exclusive interview, a day after the rate decision, with economists expecting a cut of at least 100 basis points. You're seeing some broad upside across markets in Asia, and Japan still holding on to gains, with the Japanese yen reversing earlier declines against the U.S. dollar after that much-expected rate hike. We are expecting Governor Ueda now to speak, so we'll be watching the market developments around that. Now, the call rate here in Japan at the highest level since 2008. That's it for Insight, Horizons Middle East.